everyone, and thanks for checking out my channel. Been having a look at a few commodities that I'm trading at the moment, and a couple that I'm looking at trading in the coming days or potentially weeks. Starting with WTI, a lot of action there again. It's been a great market to trade on these volatility moves. Relatively easy to catch the resistance and the support, but of course, because of the great volatility, trading with a small position. So we're looking at really low targets on this, following the breakdown on the first rising wedge. It's looking somewhere around $5, so that would be the target potentially for end of June contract, or end of May for the June contract, but we'll see. It's a bit longer term target at the moment. So what happened is that the price dropped down here and it started rising on that on the $10 support, and it started putting a new rising wedge in place. So I've traded this, entering long here on the touch down here, play that movement, reverse to short position around 16 on confirmed reversal, and now I will leave that trade playing. We'll see what's happening on the $15 level, because potentially we might just break down that wedge again, and the target will be sitting at $8, but there will be $10 in a way again, so potentially it might just bounce back and do another run up. We now have some resistance line we can draw here when between these 2 points, the double top here, and also the $18 level. That's a massive resistance for the price, so quite comfortable shorting from 16.6. Not big position, a little bit of leverage, but at the moment ETFs are not reproducing the leverage very well, so it's a low risk position. Let that trade go. Should we break much higher, potentially here, just exit and look at a new entry in the $18-19 zone. Now looking at natural gas, it was interesting also since the end of previous contract. We've seen some significant sell-off. Since then we had a bit of a bounce, but still today we had some more consolidation, likely driven by the move up in oil. So we'll see. Still in the opinion that we are continuing to push against the $2. A lot of things will happen in regards to production in the coming weeks. If speculation starts, we know that it can go really quick, and the first target will be to get to the 200 MA on the daily. That will be a massive resistance, but since we have now that cross between 20 and the 50, I'm more and more in the opinion that we're going there. Might take a bit longer. I might probably accumulate a bit there before breaking higher, and potentially even worst case scenario, we might still go and revisit that trend line down here, which I really hope we won't. At one, now it's sitting at 168, but definitely a possibility. So yes, staying with my long position and not edging at the moment, because I think it's too risky, so close to the to that line, and yes, the potential down is not that important should we break down, but yeah, we're keeping an eye on natural gas definitely. Another trade interesting was sugar. As the golden rule in trading, you usually don't move your stop loss, and I had my stop loss at 950, but the reason I did exceptionally move it down further was to respect that divergence, because that touch here, and as we moved here and broke down, we were still sitting higher than 26, that would have been the limit. So decided to move my stop loss at 910. That would have been equivalent to proper break on that trend line, and thankfully didn't trigger and got the reversal now. So moved back up to the 200 MA on the hourly chart, so it's still a lot of work to confirm that reversal. My opinion is that we are going to set a higher low in the coming days, moving back down to 960, but I think because of the divergence situation and the extremely low price, then we would start moving up toward the 1050, and the final target I had in mind would be to retest the 50% Fibonacci, which is, I don't remember exactly, I think it's 12, probably the $12 level. Now we went a bit further down, so yeah, 1250, that would be the target for that move. So yes, that's still in place, and a trade that's not in profit yet, but looking a bit more favorable now. One other one I still have in mind is entering long on WET. I did exit that position a bit higher when we broke that 538, and now we that bear flag that got broken down and likely to have a visit somewhere here. So the support, which is not an actual support, did only touch once, but the target from the flag would be sitting at 490, and we still have that big trend line running here. That's been good support for quite a while, since we had that yeah, it's been a year ago. We had a couple of touches here, another one here, so potentially the price might actually stop at 500 and bounce from there, but also could extend a bit lower, so we will see. Again, looking for divergence similar to what we had on the 1 hour on the last reversal. So look a bit closer here. Price went down and touched the line at 980, and we had that divergence here. That did signal the end of the move down and reversal up, so that'd be definitely something to be looking at. Either potentially this week, that could still happen, otherwise be having a look at this for next week. So trade opportunity going long on WET here. And finally looking at coffee, also a bit of the same configuration that WET, looking at that bear flag gave the target at 99, and we got another one, a small one, that's giving the same target at 99. So I'm confident we're going there, either tomorrow or this week or potentially next week. Something to have a look at on the 4 hours charts. We are having a small divergence here, obviously too early to confirm. I think it is still really just in the making, so it might break lower, but it's still pointing to a drop in the momentum. So even if not confirmed, that's a first sign that we might start considering long entry here, but we need proper confirmation on the trend line to make sure that we are limiting the risk of, in case it breaks down, that we are having a stop loss not too far away and limit the loss on that trade. So the stop loss will probably be sitting, should we break below that level at 97, because the next stop would be 92. That's probably a bit too much to keep that trade. There would be other opportunity, but if that trend line is getting broken, that's a concern definitely for the uptrend. As we can see here, it's been consistently holding the price here. It did extend a bit lower here, but again, if we break lower than that level, definitely concerned about that uptrend and potential resuming the long-term downtrend. We still potentially in. So yes, that'll be it for coffee as well. Until we go through another analysis, wish you safe trading, success, and speak to you soon. Cheers, bye.